Good morning, and thank you for joining us this morning. We have Cole Marr and Ariane Woods here to talk about the employee retention credit and all the changes that have happened that can be very beneficial for business owners these days, including if you've taken advantage of PPP loans so far. You can now take advantage of the employee retention credit. So Cole, take it away, and we will be recording this presentation and provide everyone with a recording and a copy of the slide deck at the end of the day.
Yeah, thanks, Jennifer. We appreciate the chance to give everybody an overview of the employee retention credit, some of the important things to know and to take into consideration and to factor in as you're deciding whether this is an opportunity for you and your company, and whether or not you should consult with an expert on this and how to navigate it. So Ariane's going to be working my slides. So next slide, please. So the key takeaways today is we're going to give you a little bit of background on the employee retention credit. There's been several iterations of it along the way, which we'll get into to really help fill you in on why it's a timely opportunity, explain what that opportunity is, and outline who is eligible, what is eligible in general, and what the process would look like to claim this credit. And then explain some of the mechanics of how it would be claimed, and then talk about ideas for what your next steps could be in investigating your opportunity for the employee retention credit. So how did we get here, right? There's various stops along the way. This credit, which is a refundable payroll tax credit, which we'll touch on the next slide as well, was initially legislated through the CARES Act in March of 2020. So at that point, it was only eligible for companies that did not receive a PPP loan. So throughout 2020, a lot of people didn't pay any attention to the employee retention credit because they just weren't going to be eligible, because the vast majority of companies did receive PPP money. Well, then at the end of 2020, on December 28th, actually, the Consolidated Appropriations Act both extended the employee retention credit into Q1 and Q2 of 2021, and it made some retroactive changes, one of which was that PPP recipients were now eligible for the employee retention credit. So starting in early January in 2021, companies that thought they weren't eligible for 2020, and rightly so, were not eligible during 2020, we're now starting to look back and evaluate their opportunity for this credit, even though they had a PPP loan. So the IRS issued further guidance at the beginning of March to clarify a lot of the situations and questions around the employee retention credit as it existed in 2020. One important thing to note on this guidance is the IRS specifically stated that it was not applicable to the employee retention credit in 2021. So most likely all those clarifications that they made are applicable, but as of right now, there technically is some guidance that is still needed on the 2021 employee retention credit, because it's now extended all the way through 2021. As of early March, in the American Rescue Plan Act, it was extended at the current rate from Q1 and Q2 into Q3 and Q4, so carrying us all the way through the end of 2021. So now that we know the long and winding path that got us here, what is the employee retention credit? So the employee retention credit is a fully refundable payroll tax credit for eligible wages paid to employees during qualifying periods. And we'll get into several of those details. But the interesting part here is the fact that it's fully refundable. So what that means is that when you generate this credit, you generate an amount, you can receive back not only the amount of credit of tax that you paid, the employer portion of the Social Security tax for that quarter or for that quarter in 2020, you can also be refunded the additional amounts over and above that from the Treasury. So there's no necessity to carry this credit forward and use it as you go. It is putting the amount of credit that you generate back in your pocket eventually. So it was designed originally to incentivize businesses that retain employees through the pandemic, right? Making sure that people don't just have a knee-jerk reaction and lay off employees, and incentivizing people to try to continue on in their course of business. Unfortunately, this credit has gotten a little bit complicated, which we'll see in a minute. And for most businesses, it is not an immediate source of funds. It's something that we're going back and doing with the luxury of a little bit of retrospect with what has happened with the PPP loans, and going back to periods that were missed. But it is generating a nice opportunity to get some funds back, get some money back in the latter part of 2021 for amounts that might have been missed in 2020 or even Q1 of 2021. And then this credit is claimed via the payroll tax filing. So your income tax return, it's not claimed directly on your income tax return. It will in some ways impact future periods income tax returns, but everything is taken care of, claimed, filed for a refund via your quarterly 941 payroll tax filing, or an amended 941, the 941X for the relevant periods of time. So these next couple of slides where we lay out the opportunity in more specifics, and the different baselines that you need to quantify and to qualify yourself are laid out in two pieces. One for 2020, which you just saw pop up for the general opportunity, and then one for 2021. And that's because a lot of the concepts for this credit remain the same when it was extended, and it was extended into 2021, but a lot of the very specific details changed. So you'll see the credit amount changed, the credit thresholds changed, things like that. So that's what we're going to step through it, one year at a time, basically. So for periods in 2020, quarters in 2020, the opportunity is a 50% credit on up to $10,000 in qualified wages paid per employee. So you look at the eligible period for the business, and you determine how much was paid to the employee, and you can include up to $10,000 in wages and health insurance expense, of which you get a 50% credit per person. So as I mentioned, you can also include health insurance expenses paid. And then on this slide, we also mention that there's a slight discrepancy in the eligibility period if you received a PPP loan in 2020. There's not a major thing to highlight. We think there'll be some clarification around this in the future, but technically, as of right now, it looks like companies that received a PPP could actually start qualification for the employee retention credit at the end of March instead of mid-March. It's a slight difference, but for certain employers, it can make a real impact. So then moving forward to 2021, the difference you'll see is that the credit is now increased to 70% on up to $10,000 in qualified wages per employee per qualifying quarter. So where 2020 was an annual opportunity, 2021 is a quarterly opportunity. So you could, if you maximize the opportunity and qualify for all 4 quarters, you could generate $7,000 per employee per quarter through 2021. And again, wages include direct compensation and health insurance expenses paid on behalf of the employee for each quarter. So who is eligible for this credit? So there's 2 ways that a company can become eligible for the employee retention credit. And you notice in the middle of the slide there, it's a big or that's underlined. It is an or, not an and. You don't have to meet both of these tests. You just have to meet one. So the first way that a company can qualify for the employee retention credit is that the business is deemed to be fully or partially suspended by a government order. So this eligibility criteria is somewhat ambiguous. Depending on your business, it might be more or less clear, right? Companies in the service industry, restaurants, hospitality, things of that nature, it was somewhat evident when they were shut down and when their capacities were restricted, et cetera. Other businesses, it might be more B2B. It's a little less clear about office shutdowns and things like that, but those need to be worked through on a company by company basis. The second, much more clearly defined and easier to calculate method to qualify a company for the employee retention credit is that the business was impacted by a significant decline in gross receipts for the quarter in 2020 compared to the same quarter in 2019. So the threshold for 2020 is that your business needs to have experienced a quarter with a 50% or greater reduction in gross receipts when compared to the same quarter in 2019. So as we move forward to 2021, you'll see very similar requirements. The first one is unchanged. If you're impacted fully or partially by a government order, you can still qualify for the employee retention credit. The change is on the definition of significant decline in gross receipts for quarters in 2021. In 2021, the decline that's required is 20%. So you look at, for instance, now we can look back at Q1 2021 and compare that to Q1 2019. If your business experienced a 20% or greater decrease in gross receipts, you're eligible for the first quarter to generate employee retention credit. Additionally, there's an election that allows us to look back at the prior quarter to qualify us for the current quarter. So, if we're looking to qualify quarter 1, 2021, maybe we didn't experience the 20% reduction, we're allowed to look back at Q4 2020 and compare it to Q4 2019, which could qualify us for Q1 2021.
And again, for 2021, we are still comparing to 2019 because the idea is to use pre-COVID as the comparison point. So we're not looking at prior year, we're looking at post-COVID hitting and pre-COVID hitting.
Yeah, thanks, Ariane. That's interesting, something important to point out when we talk through these thresholds, et cetera. The comparison period is always trying to reach back to a pre-COVID, a pre-impacted period, which is 2019. So what is eligible? So once we determine that the company qualifies, we've done some of that work. The next question is, what portion of the employee's wages can be put into the bucket of eligible wages to get them to the $10,000 maximum? So looking back again at 2019, if your business employed 100 or fewer full-time employees, then we get to include all wages paid during the period to the employee. It's important to note here that we're looking to count in 2019 full-time employees. This is different than FTE calculation. Many of you are probably have experienced the FTE calculation when it comes to the PPP application process. This is a different calculation. For this, full-time is defined as 30 hours a week or 130 hours a month. If the employee is not working that much, they're not deemed to be full-time and they don't count towards the 100 employee threshold for 2019. So if your business had 100 or more full-time employees in 2019, we can only generate employee retention credit on wages paid to employees for time not providing services. So the opportunity decreases quite a bit in most cases if you're over 100 full-time employees in 2020. And that's because there wasn't a huge period of time in many situations where companies had employees working from home or maybe not coming into a warehouse setting or a production environment where they were paying them literally to not work. So when you're over 100 employees full-time in 2019, the 2020 opportunity is much reduced. But when we move forward to 2021, you'll see that the analysis is the same, but the threshold has been greatly increased. So in both scenarios, we look at the 500, the threshold goes up from 100 to 500. So in 2021, if you're below 500 full-time employees, again in 2019, we get to include all wages as potentially being qualified during the impacted period. If you have if you had more than 500 full-time employees in 2019, then again, we're scaling back to the eligible wages only being those for employees that were paid for time not providing services for your company.
And this is really geared towards making sure that it's the smaller companies that are seeing the benefit.
So a quick summary here of the ERC process and how you get to the point of generating a credit. So the first thing is to determine if your company is an eligible employer, as we discussed, and then to determine if the company paid qualified wages. You calculate the credit amount on an employee by employee basis. So this is an important factor to remember, is that, you know, there's some of the qualifications as an eligible employer, what are the qualified wages, but then when we're actually calculating and generating the credit, it's done on an employee by employee basis. So the 10,000 eligible wages, which, you know, could generate a 50% credit in 2020 or a 70% credit in 2021, has to be calculated and is generated and limited on an employee by employee basis. And also important to note, when we talk about that employee by employee basis, and on the last slide, we were talking about the employee thresholds of 100 full-time or 500 full-time. Once we do that analysis of eligible employer, you know, those thresholds, we get to include wages paid to any employee. It doesn't just have to be the full-time employees. Anyone that was paid during
Almost any employee, we'll get to that.
Well, almost any employee during the qualified period could generate. So part-time employees, you know, people that are less than full-time could potentially be included. And then as we mentioned before,
and we can also include new hires. So if you're hiring someone and they come in during the period and they were someone who wasn't even employed in 19, they're still eligible.
Yeah, so for instance, if you've been fortunate enough that maybe your business expanded in Q1 of 2021 and you have employees that you didn't have in 2019, they're still eligible if you otherwise qualify for the employee retention credit in Q1. So that's part of what this credit is really meant to incentivize, is, you know, obviously retaining employees, but also, you know, providing a way for you to expand and potentially emerge from what we've all been through the last year and a half stronger and better. So next slide, please. So we had a little bit of fun with these slides. These are fun facts. So there's just a lot of details in this employee retention credit that don't fit neatly into a table or linearly. There's just a lot of details here and there that are important to get across as considerations. So we'll just go through the list. You know, we've mentioned the employee retention credit is really available to companies of all types and sizes. There are obviously guidelines based on the size of your company, et cetera, as we just walked through, but there's no limitation overall on, you know, the size or types of companies that can benefit from this credit, assuming they meet the guidelines. When we're talking about the gross receipts reduction specifically, people have a question around the next bullet, is that there's no requirement to prove specific harm or a causal relationship for why your gross receipts were reduced. So you don't have to prove that it was a COVID-19, it was a pandemic impact that reduced your gross receipts. In most cases, it's clear that that's what it was, but there's no documentation standard, there's no threshold by which we need to prove that that's why your gross receipts were reduced. As we've mentioned, now businesses that received PPP funds are eligible to claim the employee retention credit. We just have to make sure that there's no double dipping on forgiven PPP funds. So any wages that were forgiven in the application process of the PPP-1, or potentially as we move forward and you start contemplating the wages that might be forgiven in a PPP-2, we just have to make sure that we're not using those wages to generate employee retention credit. Now, this creates an opportunity in Q1 and Q2, and potentially in some cases Q3 of 2021, in that if you have a PPP-2 loan, you haven't filed for forgiveness yet, there's some ways that you can look at how you allocate expenses relative to claiming the forgiveness and the forgiveness process that could help maximize the employee retention credit opportunity. So that's it's a complicated process of moving amounts around and trying to find the right solution for your business to make sure you are able to maximize the benefit from both of those opportunities. So on to the next bullet, when we're judging the baselines, we're talking about all these baselines from 2019, full-time employees, and then what your gross receipts looked like, things like that. Acquisitions and dispositions are factored into the base amount. New locations or a business expansion, for instance, as Ariane mentioned, or addition of employees, does not have to be factored into that 2019 base. So again, if you were fortunate enough to grow in the last quarter maybe, and you otherwise qualify, we're just going to get a little bit more impact, a little bit more benefit on the employee retention credit. If you're in a business where your employees are receiving tips and those tips are reported on their W-2, those amounts can be included as an eligible wage for the employee. So that's a nice thing to keep in mind if you're in a business like that. When we're looking back at 2020, we mentioned that first couple of weeks in March, right? Well, that's the Q1 2020 941 payroll tax return that would be claimed on. There was an accommodation made that any amounts that are generated in Q1 of 2020 can actually be filed via the Q2 941X. So that just eliminates the need to go back and amend that Q1 payroll tax filing, and then eliminates some of the administrative burden a little bit on that front. In 2020 and 2021, but this largely impacts 2020, if you furloughed employees but continued to pay their health portions of their health insurance expense, those portions of their health insurance expense can be included as an eligible wage during the time period. And the last bullet, there is a mechanism theoretically for advanced payment of the employee retention credit. It's Form 7200. As of now, we're not recommending that anybody go through that process because our evidence tells us, the experiences that our clients have had with it, is that it's really not speeding up the process of getting these funds to the company. And in some cases, it's potentially creating an extra loop, an extra obstacle for companies to eventually receive those funds. So as of now, we're shying away from that Form 7200 form for advanced payment of the employee retention credit. So more facts, things that you need to consider. Basically, in 2020, you cannot claim the employee retention credit and the work opportunity tax credit for the same employee. So those employees' wages would need to be excluded from the calculation. You also, for 2020, cannot include amounts that were included in the paid family medical leave credits, the FFCRA credits that were also, I believe, put into place in the CARES Act. You need to make sure, similar to the PPP, that we're not double dipping on those amounts. And then when they extended it to 2021, they also included some other credits that cannot be included. Basically, again, make sure you're not double dipping on things like the R&D tax credit, some other hiring credits, things like that. Some key limitations or some things to consider when you're determining eligibility. You have to aggregate gross receipts and employees when we're looking at that 2019 base period for commonly owned businesses. So if there's 50% or greater common ownership of 2 or 3 or more entities, even if they're unrelated operationally, in order to determine if there was a significant decline in gross receipts and to determine that full-time employee threshold, those businesses would need to be aggregated together for that analysis. And additionally, you can't generate the employee retention credit for the owners or direct relatives of greater than 50% owners of a business. So if you own the business and you have a couple of relatives employed, you would not be able to take the credit for yourself or those direct relatives as outlined in this slide. And then, you know, as we sit here basically a year and a half after this credit was first introduced, there's still, you know, increasingly fewer, though there are questions surrounding various circumstances, cases, if-then scenarios for the employee retention credit, because as we note here, and the legislation is light on tax law and somewhat heavy on IRS FAQs. The new guidance that we mentioned has done some to clarify that, though again, that's only good guidance technically for 2020, likely will apply to 2021, but we're still waiting on confirmation of that. So, you know, the credit overall, I think that the summary, the takeaway is it's a really great opportunity for companies that meet all the requirements. It's a powerful thing, but it is somewhat tedious to calculate and needs a thorough analysis of whether or not you qualify and how you get to those amounts.
There's definitely some quirks with how the credit interfaces with the facts and circumstances of different companies. And so that's, there's just a lot of things in play.
Yeah, so next slide, please. So some next steps, how should you move forward? What should you think about, especially if you would qualify based on the government shutdown orders, you need to maintain information, essentially proving that eligibility, right? The gross receipts information will be retained, right? That likely exists in your financials, but the government orders and what happened and how you were impacted really should be documented as close to the time as possible. So once you determine if you're qualified, you need to develop a detailed calculation of wages that result in the credit amount. You should coordinate with your payroll tax provider to see what reporting mechanisms, what information they can help you with. We've found that some payroll tax providers have developed specific reporting functionality, ways that they can export the data for you that make it a little more workable. And then also to coordinate with your payroll tax provider, because they'll be the ones that need to make any amendments, or likely the best group to handle amending any payroll tax returns that you might need to amend to make claims for prior periods. And the other thing that you might want to do is think about talking to an expert, you know, in the employee retention credit. To the extent anybody's an expert at this point, it's all sort of unraveling, and we're all learning as we go. But we've been fortunate enough to work with a lot of companies at this point and help a lot of companies calculate it and navigate the process. It seems like every company does have some sort of unique quirk to them and how they're going to qualify or how they're going to quantify this credit. But there are definitely obstacles that are surmountable in every case and have been worth the time spent determining, again, the eligibility and getting to the credit amount for the people that have qualified.
The next few slides are some examples that we will include in the presentation as we post it, but weren't planning to walk through them. So we've got examples of 2020 and 2021, and then we're happy if there's questions today. So we're happy to take any questions. Otherwise, be happy to talk with you offline. We do have, I think in the email that goes out with the link to the presentation and the recording, our landing page has some information. And so putting in a little bit of information about the company, and then we'll send us an email and we can give a sort of a rough estimate and have a good conversation with the information already at our fingertips.
Yeah, help you navigate the process of determining if you're eligible. I believe on the landing page as well, there's a couple of flow charts that you can download that lay out the opportunity. You can walk through it that way. But again, don't hesitate to reach out. We're happy to take some time and walk you through the qualification and see if there's a way that you can benefit from this lucrative credit, and then help you navigate to the best way for your company to actually claim it.
Thank you guys. That was a great presentation. And thank you everyone who is attending live or streaming. We appreciate you dialing in. And like we mentioned several times, you will be receiving a copy of this recording, as well as a copy of the slide deck, access to even more information, including flowcharts, in an email that you will all get this afternoon. All right. Thank you for joining us, and goodbye. Have a great day.
Thank you.